Let me ask you something. If tomorrow your favorite brand, the one whose products you use daily, made massive profits, should only the owner get rich? Or can you legally own a piece of that success too? Because that is what stock market actually is. It is ownership. It's not gambling, it's not magic, not a get rich quick scheme. It is actually ownership. And today I'm going to break it down in the simplest, powerful way possible. So, by the end of this video, you'll understand what a share actually is, why prices move, and how people really make money, whether it's gambling or not, and why compounding can literally change your family's future. And yes, I'm a CA aspirant, so we are doing this properly. Let's go. What is a share? Share is basically ownership. It is not just numbers on screen. Imagine this. There is a company called Trophy Makers. They make 100 crores profits every year. Now, instead of one person owning it entirely, they divide the ownership into small pieces. Those small pieces there are called shares. When you buy one share, you're not buying a lottery ticket. That one share is called a tiny ownership in that particular company. This means that if the company grows, your small piece of share also grows. If the profit increase, your value of that share also increase. If the company is struggling, let's say the company is making some loss, your ownership value also falls. It's like owning one small brick in a big building, and it is a small brick in the real building. So stock market is simply a marketplace where people buy and sell these ownership pieces. That's it. There is no mystery in it. That's it. So why do share prices move? It is basically because of demand and supply. It's the real game. Now here's where most beginners gets confused. They think prices move randomly. It doesn't. Prices move because of one powerful force, that is, demand and supply. If more people want to buy a share than selling it, the prices go up. If more people want to sell a share than buying it, the prices go down. Let's understand a simple example. If 1,000 people want to buy a company because it just announced amazing profits, but only 200 people are willing to sell, so basically, the demand is high, right? Many people want to buy it, but few people are willing to sell. So buyers are competing. Prices increase. Now, if it is reversing, let's say a bad news, there is a scandal, or there is a weak results. Everybody wants to sell the share, but nobody wants to buy it, right? So the demand is low, supply is high. So at that point of time, prices basically fall. That's it. Stock prices reflect future expectation, companies' performance, economic condition, and investor emotions. Yes, investor emotions. Fear and greed to a certain level affect the markets. Business performance moves market long term, but fear and greed moves market short term. Remember that. Now let's talk about how do actually people make money. There are three primary ways: capital appreciation, dividends, and compounding. So, what is capital appreciation? You buy a share at rupees 100, company grows, more demand comes, and the price becomes 200, and then you're selling it. So, you gain 100 rupees, right? You're buying a share at 100 and you're selling it for 200. So, what is your profit? What is your gain? 100 rupees is your gain, right? So, that's growth investing. And there is the second way how you can make money is dividends. Some companies share profits with shareholders. If company earns well, they may pay you a part of profit directly into your bank account. You didn't work extra, your ownership worked, right? Just because you bought the share and the company announced profit, you're getting that profit. Now, the third way of making money is compounding. It's the silent wealth creator. This is where it becomes powerful. Let's say you invest rupees 10,000, right? It grows at 12% per year. So at the year one, you'll be having 11,200. That is 10,000 plus 12%. You'll be having 11,200. In the second year, you earn 12%, not on 10,000, but on 11,200. Now growth start earning growth. Now that is called compounding. It's not flashy, it's not viral. It's mathematically unstoppable over time. The stock market is one of the most powerful tools for compounding because businesses grow. And when businesses grow consistently, ownership value grows. So time plus growth is equal to wealth. Is stock market gambling? Is it gambling? Short answer, it depends on you. If you randomly buy based on tips, if you trade without knowledge, if you chase quick profits, if you react emotionally, that is speculation. And speculation feels like gambling. But if you study companies, understand financials, invest in strong businesses, think long term, diversify risk, that is investing. Gambling depends on luck, right? So if you get the right knowledge of stock market and then enter into the market, it is not gambling. But if you randomly just by the idea of it enter into stock market and then start investing, it is called gambling. So investing depends on analysis plus patience plus discipline. So gambling is emotional one, and investing is structured. Market itself is neutral, okay? Your approach decides the outcome. Why most people lose money? Not because market is evil, but because they want fast results. They panic during falls, they enter without understanding risk, they don't respect time. So that is why the many people entering into stock market are losing money. We live in a generation of instant dopamine, right? But wealth rewards maturity. And now, the truth about risk. Here's something mature investors understand. Stock market is volatile. Prices move daily, but volatility is not risk. Permanent loss of capital is risk. If you buy strong businesses and give them time, temporary fluctuations are normal. That is why knowledge matters. This is why financial education also matters. And this is why I'm building this channel. Because I genuinely believe that financial clarity unlocks human potential. When money fear reduces, confidence increases, choice increases, and the freedom increases. Why I care about teaching this? I'm a CA aspirant. I study financial statements, I study audits, I study business structures. But beyond exams, I care about something bigger, helping people unlock their highest potential and remove the fear of money. Because money is not evil. Ignorance about money is expensive. If we learn early, invest wisely, and stay disciplined, our future self will thank us. Let me leave you with this. Stock market is not a place to prove intelligence. It is a place to practice patience. So remember, investing into stock market without the right knowledge is never advised. If this video gave you clarity, subscribe. Let us all together unlock high potential lifestyle and live with fulfillment. Thank you.